Hey, what's going on, guys? Welcome back to the channel. If you've been following the stock market recently, you know that we just wrapped up one of the craziest weeks that we've seen in quite some time now, with massive short squeezes in stocks like AMC and GameStop, which then in turn led to a pretty significant market correction. And the reason this happened was because of a massive degrossing event by hedge funds. And what that means is that due to these massive short squeezes, a lot of hedge funds had their worst month in years, so they were forced to take down some of their long exposure or sell some of the stocks that they owned to cover some of these losses on their short positions. And when you have something like this happen, where you have all these hedge funds taking down their long exposure to cover their shorts at the same time, it not only helps drive the price of a GameStop or an AMC higher because of the short squeeze, but on the other side of it, the majority of the market ends up taking a pretty good hit just because they're all selling off stocks at the same time. So even though that was a wild week in the market, I think that it provided us with a pretty good buying opportunity. So in today's video, I'm going to be going over my top 5 stocks to buy in the month of February. And today we have a pretty wide variety of stocks ranging from some big cap giants all the way down to some smaller caps with not only a lot of growth potential, but some pretty high short interest. And if you know what types of stocks are trending in the market right now, thanks to Wall Street bets and all the retail investors that are coming into the market, it's these high short interest stocks. So make sure to watch all the way through to get the most out of the video. And if you haven't already, hit that subscribe button and drop a like if you want to see more videos like this. All right, so the first stock on the list is PENN National Gaming, which trades under ticker symbol PENN and currently costs $103.72 a share. And if you've been on social media, especially Twitter, in the past couple months, I'm sure you've heard about PENN, but if you haven't, it is the gaming company that has merged with Barstool Sports. The reason I like PENN compared to some other gaming and casino stocks is because not only is the casino industry starting to come back, but the online sports betting industry is a market that is really just getting started, and I think that PENN and Barstool are positioned extremely well to just completely take over this market. And this is mainly because of Barstool's massive influence on just sports media as a whole, but they've currently launched in 2 states, Indiana and Michigan, and here's what happened so far. When they first launched in Indiana, they absolutely crushed download records in the first weekend, and just last week when they went live in Michigan, they had a big promotion where they matched all first deposits and then donated all of the money to the Barstool Fund to help small businesses, which brought in a ton of new users. So far they've had 2 very successful launches, and I think just with Barstool's fan base and all the leverage they have in the entire sports media world, that's what's going to help PENN and really put them ahead of the others. So once more states start to legalize online sports betting, it'll be interesting to see how they roll out, but just from their past 2, I think that they're on a pretty good trajectory, and I think they have a lot of growth potential for the future. So we'll see what happens with that one. The next on the list is the industrials giant Caterpillar. The stock's ticker symbol is CAT, and it trades for $182.84 a share. And if you've ever been around a construction site, you've definitely seen some of CAT's machinery, as they're one of the largest construction equipment manufacturers in the world. They sell different machinery, engines, financial products, and insurance products to companies all around the world. And I definitely think it's a good stock to hold for the long term, as it's just one of the leaders in this industry. But I'll show you why I like it at this point right now. Here's a look at CAT's 20-day chart, and you can see that along with the entire market, CAT has had a nice pullback from its highs. And on top of that, last week, they had a very strong earnings support, so I think that puts them in a good position to have another successful quarter moving forward. Here's a quick look at some of their main points from the report, and you can see that they reported an adjusted profit per share of $2.12, a profit margin of 11.8%, and they also returned $3.4 billion to shareholders through dividends and share repurchases in 2020. So despite the hurdles that pretty much every company had to face during the pandemic, CAT still had a very strong quarter and improved their outlook for the next couple quarters. So once all of this hedge fund degrossing begins to slow down, I think that puts CAT in a pretty good position and puts it at a pretty good buy at this level for the next month. All right, the next one is a little different, as it is an ETF for the cannabis industry. The ticker symbol is MSOS, and it currently trades for $41.79 a share. As of right now, only 15 states have completely legalized cannabis for recreational use. So once that begins to roll out across the nation and more states begin to legalize it, there's definitely a lot of growth potential in some of these up-and-coming cannabis companies. So with that being said, I think there's a lot of people that want to get involved in this space and really just start investing in this industry. But number one, they might not know how, or they might not know what companies to look for or how to differentiate one stock from another. So that's the reason why I specifically like this ETF. And this ETF allows you to invest in the entire sector, all the way from small cap to large cap, and have exposure to some of the top cannabis companies in the US. And here's a list of some of their top holdings. So similar to investing in ETFs that track, say, the tech or the financial sector, you can invest in this cannabis ETF so you don't have to spend time worrying about if you're picking the best companies or the best stocks to invest in. If you take a look at this ETF's one-year chart, you can see that it also had a bit of a pullback with the market last week, which I personally see as a good buying opportunity, as this industry is expected to continue to grow, and cannabis sales are expected to grow up to $40 billion by 2025. And since the Democrats have been very open about their pro-cannabis stance, I don't see this momentum in this cannabis space slowing down anytime soon. All right, now the last two here are more of my home run stocks that have a lot of room to grow, but mostly a lot of room to recover. The last three stocks I had mentioned, like the S&P 500, had just recently pulled back from their all-time highs, but these two stocks are some that have not seen all-time highs since before the crash in March, as they were just completely nailed by the pandemic, and I've really just been trading around this lower level for quite some time now. The first one is American Airlines, and the next one is Carnival Cruise, and I'll explain both of them together here because my thought process is fairly similar for both. First of all, both of these stocks have a pretty high short interest of around 15%, and if you've been noticing what happens to stocks like this with high short interest, you know that it's a pretty dangerous game to bet against them, especially in the market that we're in right now, with Reddit users and all the Wall Street Bets army trying to attack hedge funds in any way they can by pumping up these heavily shorted stocks. But despite the Wall Street Bets army and the high short interest, this isn't the only reason why I'm paying attention to these two stocks. The travel industry got completely hammered over the past couple months, but I would expect that to continue to recover into the next couple quarters, especially now that we have 4 different vaccines continuing to roll out every single month. Even though people might not get vaccinated and then just start traveling right away, we do know that people like to take advantage and book things like flights, cruises, and just all of their trips ahead of time, especially right now, to capitalize on all of these low prices. And once confidence is restored in the people in regards to the travel industry, I would expect stocks to obviously front run this move, as they always do, and then start to recover pretty quickly. And obviously these companies are not in the best place that they've ever been, but when you look at it from a rate of change perspective and you compare their performance really just in the past couple quarters and just overall during the pandemic, and then if you look where we are now with vaccines rolling out and travel starting to pick back up again, I would expect their business really just to only go up from here and increase into Q1 and Q2. Now, as I said earlier, this is by no means a crowded trade. People are not piling into the airlines and the cruise lines, and with such a high short interest, if we do see these stocks start to break out from their bearish trend levels, then I think it could be a pretty quick and sharp reversal. And we saw something like this happen not too long ago, if you remember a couple months back, where the first vaccine was officially announced. Right after that, the travel industry and just travel stocks in general absolutely exploded, and some of them went up, 20, 30% in a single day as people just started to rotate into these trades. So if you look at where the stocks are right now and you're just trying to predict where this industry is headed, I definitely think the risk-reward ratio is in your favor. So that's why I'm looking towards these two stocks, as I think there could be some big margins for profit. So I definitely think there's a lot of opportunity out there right now, but let me know what you guys think about these stocks in the comments below. And if you haven't already, make sure to hit that subscribe button, and I will see you guys next time. Peace.